In the early 1970s, a quiet deal was made, a deal that would reshape the global economy. It tied the world's most important resource to the world's most powerful currency, oil, for dollars. No treaty was signed on a world stage. No public announcement explained what had just happened. But the consequences would echo through wars, alliances, and financial markets for the next half-century. Because from that moment forward, the world could not run without two things: oil and the American dollar. Every nation that needed energy needed dollars. Every government that needed dollars became connected to the American financial system. It was an arrangement so powerful that it quietly cemented the United States at the center of global economic life, not through conquest, but through currency. Understanding how that system came to exist requires going back to a moment when American power suddenly looked fragile, a moment when the foundation of the global financial system collapsed almost overnight, and Washington needed a new one. If you're into stories that uncover how power really works behind the scenes, consider subscribing and turn on notifications so you don't miss what comes next. To understand the petrodollar, you have to start with the world that existed before it. In 1944, as World War II was nearing its end, leaders from 44 nations gathered in Bretton Woods, New Hampshire. Their goal was simple: build a financial system that could stabilize the global economy after the chaos of war. The solution they created placed the United States at the center. The dollar would become the anchor. Every major currency would be tied to it, and the dollar itself would be tied to gold. $35 for 1 ounce. Foreign governments could exchange dollars for gold whenever they wanted. That promise gave the system credibility. In practice, the dollar became almost as good as gold. And because the United States emerged from the war with the largest economy, the strongest industry, and most of the world's gold, the system worked for a while. But by the late 1960s, cracks were forming. America was spending enormous amounts of money. The Vietnam War was draining resources overseas. Domestic programs were expanding spending at home. And more dollars were circulating globally than the US government could realistically convert into gold. Foreign governments started noticing. France began sending ships to New York to collect gold in exchange for dollars. Other countries began asking the same question: what if America didn't actually have enough gold to honor the promise? The risk of a financial panic grew. So on August 15, 1971, President Richard Nixon made a decision that shocked the world. In a televised address, he announced that the United States would suspend the dollar's convertibility into gold. Officially, the suspension was temporary. In reality, it ended the Bretton Woods system forever. For the first time in modern history, the world's reserve currency was backed by nothing but trust. No gold, no physical guarantee, just faith in the American economy. And that created a dangerous question. Why should the world keep using the dollar at all? Washington needed a new anchor, something the world could not function without, something that would force global demand for dollars to continue. The answer appeared just 2 years later, during a crisis that nearly brought the global economy to a halt. In October 1973, war erupted in the Middle East. Egypt and Syria launched a surprise attack against Israel during the Jewish holiday of Yom Kippur. The conflict quickly drew international attention. The United States backed Israel, and several Arab oil-producing nations responded with a powerful economic weapon. They stopped selling oil. Members of OPEC imposed an embargo on the United States. and several Western countries. The effect was immediate. Oil prices exploded. A barrel that had cost around $3 suddenly surged to nearly $12. Energy prices doubled, then quadrupled. Gasoline shortages spread across the United States. Cars lined up for miles outside fuel stations. Factories slowed. Air travel declined. Inflation surged across Western economies. The modern world ran on oil, transportation, manufacturing, electricity. Without it, economic activity stalled. The embargo revealed something unsettling. The global economy was dependent on energy, controlled by a small group of countries in the Middle East. For American policymakers, the crisis delivered two lessons. First, energy security had become a strategic necessity. Second, oil had become the most important commodity on Earth. And if the United States could connect oil to the dollar, it could restore global demand for its currency. The search for a solution began quietly, behind closed doors, in diplomatic meetings. Few people at the time fully understood. The key to the entire plan lay with one country: Saudi Arabia. The kingdom controlled some of the largest oil reserves on the planet. And more importantly, it had enormous influence within OPEC. If Saudi Arabia made a decision about oil pricing, other producers often followed. So Washington focused its attention there. Throughout 1973 and 1974, negotiations unfolded quietly between American officials and the Saudi leadership. Henry Kissinger played a central role in the discussions. The idea was simple, but its implications were enormous. Saudi Arabia would sell its oil exclusively in US dollars, not euros, not gold, not any other currency, only dollars. And after selling that oil, the Saudis would invest much of their revenue back into American financial markets. US Treasury bonds, American banks, American assets. In return, the United States would provide something equally valuable: security. Washington promised to protect the Saudi monarchy. It would supply advanced weapons, provide military training, and defend the kingdom against external threats. It was not a formal treaty. No public document spelled out every detail. But the understanding was clear: oil for dollars, security for oil. Soon, other OPEC countries adopted the same pricing structure, because Saudi Arabia had already set the standard. And just like that, a new global system was born. What made the petrodollar system so powerful was not just how oil was priced, it was what happened after the money moved. Every time a barrel of oil was sold, dollars flowed out of consuming nations and into oil-exporting states. But those dollars didn't stay there for long. They came back. This process became known as petrodollar recycling. Oil exporters, especially in the Gulf, earned more revenue than their domestic economies could absorb. So they reinvested those dollars into global financial markets, primarily into the United States. US Treasury bonds, American banks, dollar-denominated assets. The effect was subtle, but enormous. It created a continuous loop. The world paid dollars for oil. Oil producers sent those dollars back to the United States. And that capital helped finance American deficits and stabilize its financial system. This recycling helped keep borrowing costs lower for Washington and reinforced the dollar's position as the world's reserve currency. It also created a structural imbalance. Most countries, when they run persistent trade deficits, eventually face pressure. Their currency weakens. Imports become expensive. Adjustments are forced. But the United States operated under different rules because global demand for dollars remained artificially high. Those pressures were delayed, sometimes indefinitely. In effect, the system allowed the US to consume more than it produced for decades. But this system depends on one assumption: that oil continues to be priced and recycled in dollars. If that changes, the consequences begin slowly. Then, all at once, if major oil exporters start accepting other currencies, global demand for dollars weakens. Fewer dollars are needed to buy energy. Fewer dollars are held in reserves, and fewer dollars flow back into US financial markets. That changes the equation. Borrowing becomes more expensive. Interest rates rise. Inflation pressures increase as the currency weakens. And perhaps most importantly, the United States loses a form of invisible leverage, because the power of the dollar has never just been economic. It has been structural, built into the way the world trades, saves, and settles transactions. If that structure fragments, if energy begins trading across multiple currencies, the system doesn't collapse overnight. It diffuses into something more complex, more competitive, and far less centered on a single nation. Which raises a question. That didn't exist in 1974. What happens when the world no longer needs the dollar to function? Once oil became tied to the dollar, the Middle East took on a new strategic importance. The region contained the majority of the world's proven oil reserves. Saudi Arabia alone possessed vast energy resources, capable of influencing global markets. And if those oil supplies were disrupted, the consequences would ripple through every industrial economy on Earth. That reality changed American foreign policy. The Persian Gulf became a strategic priority. Military alliances expanded. Security commitments deepened. In 1980, President Jimmy Carter made the new policy explicit. Any attempt by outside forces to control Persian Gulf oil would be considered a threat to US national security. The United States was prepared to respond with military force if necessary. This became known as the Carter Doctrine. American naval fleets increased their presence in the region. Military bases appeared across the Gulf. Security cooperation expanded with Saudi Arabia and neighboring states. Over time, conflicts across the Middle East intersected with the importance of oil. The Gulf War in 1991 followed Iraq's invasion of Kuwait, one of the world's major oil producers. The stability of energy markets was a central concern. Later interventions in the region occurred within the same geopolitical landscape. The United States had become deeply invested in protecting a region whose resources were now tied to the dollar system. The petrodollar had transformed energy into a strategic pillar of American global influence. And for decades, the system appeared almost unshakable, until new economic powers began asking a dangerous question. What if oil didn't have to be priced in dollars anymore? For most of the late 20th century, the petrodollar system operated with little serious challenge. But the 21st century introduced new players and new ambitions. China's economic rise changed global trade patterns. The country became the world's largest importer of energy, and it began exploring ways to conduct that trade without relying entirely on the American currency. In 2018, China launched oil futures contracts priced in yuan. It encouraged energy exporters to accept payment in Chinese currency. Russia, facing Western sanctions, began shifting portions of its energy trade away from dollars. Iran, long restricted from the US banking system, experimented with selling oil in alternative currencies. Meanwhile, a group of emerging economies known as BRICS began discussing financial structures that could operate outside Western-dominated institutions, alternative payment systems, new development banks, even the possibility of a shared reserve currency. The goal was not to overthrow the dollar overnight, but to reduce dependence on it. At the same time, some Middle Eastern producers began exploring deeper economic ties with Asia. China became the largest buyer of Saudi oil, and discussions occasionally surfaced about accepting yuan for some energy transactions. The shift remains limited. The dollar still dominates global energy markets, but the monopoly is no longer absolute. And the more alternatives appear, the more pressure the system begins to face. For now, the dollar remains the world's primary reserve currency. A majority of global oil transactions still occur in dollars. U.S. financial markets remain the deepest and most liquid in the world, but the system rests on a foundation of incentives, not laws. Countries participate because it benefits them. If those incentives shift, the system could evolve. A gradual move toward multiple currencies and energy trade would weaken one of the pillars, supporting global dollar demand. That could make borrowing more expensive for the United States. Interest rates could rise, inflation pressures could increase. The geopolitical implications would be just as significant. American sanctions rely heavily on control of the dollar-based financial system. If more trade occurs outside that network, Washington's leverage diminishes. The shift would not happen overnight. Global financial systems change slowly, but history shows they do change. The British pound once dominated international trade before it was replaced by the dollar, and every financial empire eventually faces the same question. How long can the system last? For more than 50 years, the petrodollar system quietly shaped the global balance of power. But look at the world today, and something feels different. Oil routes are once again at the center of geopolitical conflict. The ongoing war with Iran has already disrupted shipping through the Strait of Hormuz, a narrow waterway that normally carries roughly 20% of the world's oil supply. When tankers stop moving through that corridor, the consequences ripple across the entire planet. Energy prices surge, markets react, governments scramble to stabilize their economies. In recent weeks alone, global oil prices have climbed above $100 a barrel as the conflict threatens supply lines and financial stability. At the same time, Venezuela, home to the largest proven oil reserves in the world, has become another flashpoint in the global energy map. After U.S. intervention reshaped control of its oil industry, and behind all of this, another quiet shift is unfolding. China, BRICS nations, and several sanctioned states are exploring ways to trade oil outside the dollar system. Not tomorrow, not overnight, but slowly. The same way the system itself was built. Because the story you just watched isn't just about the past. It's about a system that still shapes wars, alliances, and the global economy today. And the question now is simple. Is the petrodollar empire entering a new phase or the beginning of its decline? If you want more deep documentaries uncovering the hidden systems of power shaping our world, subscribe to the channel, because sometimes the biggest forces in history aren't the ones happening on the battlefield. They're the ones happening quietly behind the global economy.